that the best advice is just to be on the right side of the mega trend, and the worst advice is fighting it. Generally, when I've done that, that's probably most likely when I've made a mishap.
My guest today is the closest thing to a pan-asset class guru who I know. Really, nobody speaks better across asset classes than Charlie Morris, my former colleague in the UK, I might add. Charlie is the founder of ByteTree.com, which is an investment research company famed for its Bitcoin plus gold ETF. Combines both of those assets, kind of unusual. The name is BOLD. The ticker is BOLD, B-O-L-D. Charlie's going to talk about asset classes, U.S. stocks, UK stocks, bonds, Bitcoin and gold, and a bit more. Charlie, welcome.
It's great to be here, James. Thank you.
So first things first, I like to start with a little lightning round just so people can get to know you. These are just random personal questions, no need to think too much. Last concert you attended and or favorite musician/musical group?
I think it was Kylie Minogue.
Oh, yeah, peppy music. Yeah. All right. Oddest job you've ever had?
Soldier. I was in the army.
That's not odd per se, but it's unusual in the career path. That's quite interesting. Yeah, and thank you for your service, Charlie. Best or worst investing advice you've ever gotten?
Ever received or given?
Both. Either one.
God, I like to think that the list of bad advice has been much shorter than the other way around. I think that the best. God, I'm going on too much, aren't I? That the best advice is just to be on the right side of the mega trend, and the worst advice is fighting it. Generally, when I've done that, that's probably most likely when I've made a mishap.
Fits me too. I think that's accurate. U.S. or UK stocks right now?
UK, because they're cheap. They're half the price.
Yeah, sure, cheap. Yeah. U.S. stocks or U.S. bonds, if you had to pick U.S.?
Probably U.S. bonds right now. And if you specifically said tips or bonds, I'd say tips. I love them. U.S. tips are fantastic, particularly under 5 years.
Interesting. So you're a bearish guy, at least at the moment. It sounds like.
We've had a hell of a bull market for a hell of a long time, and prices are elevated.
And trees don't grow to the sky, or at least they usually don't. Yeah, I think there are a lot of people who grew up in this bull market who that's all they've known. That's all they've known, and they're getting quite a wake up call. 2022 went down. This year is kind of a bit better, but we're still not. I don't think we're going to see some of those valuations in our lifetime again, personally.
Bubbles and crashes always come along, but they're always different from last time. When people compare the current Silicon Valley.com thing to the one in the late 90s, the one in the late 90s didn't have nearly as much profit as the one today. The one today, for all its faults, it bangs out that cash.
That's true. Yeah, and this one was more for low interest rates or from low interest rates than just exaggerated expectation. We had both, but in the 90s it was pure expectation. This one we actually had an a discounted cash flow model. If you have those rock bottom interest rates, that makes the value of some biotech company that's going to earn a big pot of money way into the future. That bumps up the value of that sort of company relative to a here and now cash flow gushing type of business. But things are changing quickly. Charlie, you mentioned tips. Let me open with this and. I read something that your BOLD ETF, and it's not a plug for BOLD. I'm just mentioning this because I think it's a fair question. Has similar volatility as U.S. tips. Is that accurate?
The volatility of the BOLD ETF is about 15%, depending which currency you measure in it, over the last year, which is below the Nasdaq, it's below the S&P, it's below most stock markets. Now, is it the same as tips? Well, it depends on what kind of tips. So it would be much lower than long-dated tips, so 30-year tips, 20-year tips, but it would be higher than 5-year. So I'm gonna make an educated guess that it's probably about the same as 10-year tips.
Wow, that's impressive. So let me unpack this idea of combining Bitcoin and gold. Gold first. So I wrote an article in Forbes a couple of months ago about gold, and it was really more about these like perma bull gold people. And I'm not going to name names, but some of these guys have been saying gold $50,000 an ounce, gold $20,000, and they've been saying the same thing for 10, 15, 20 years or more. I'm convinced it's a marketing trick for a lot of them. They want to appeal to, it's usually kind of an older investor base that thinks the world used to be a better place and now things are just ruined, and so I want to go into gold. So they're playing on psychology there. But there's another way to look at it. The empires rise and empires fall, and that could take generations at times. How do you reconcile those? I mean, I guess what I'm saying is the really hardcore gold crowd has been wrong for a long time. Now you can pick and choose with the charts and say, okay, if you bought gold these past 3 years, whatever. But generally, gold hasn't been phenomenal. More people seem to be turning to it now. Like, what am I missing if I come with that skeptical perspective?
So gold might surprise you. Over the last 23 years, which makes up the 21st century, is ahead of the S&P 500, including dividends.
Huh.
Not many people know that, and the gap
does surprise me.
Yeah, and that's basically gold had the first 10 years, massively so, and the second 10 years went to the S&P. But, put the two together, gold's marginally ahead. Gold is kind of, we would normally say it behaves like tips. It's kind of like a 20-year bond, an inflation-linked bond. But this time, it's sort of fought through that. We had reports out this morning that China had been increasing their reserves again. These countries like China, whether they go through good times or bad, they've got all these exports. We send dollars to America or pounds, but the pounds are converted to dollars, and the dollars go not to America, to China. And then what does China do with those dollars? They'll do something. And they can't stack them all up in a room. And they used to buy U.S. treasuries, but then relations broke down. So it helps America to have a lot of treasuries from China. And because it keeps your yields down, but they've sort of eased off on that. And so, what's the alternative? Buy pound, buy gilts? Not really. They don't want to do that. ECB money? No, they don't want to do that either. So they look for alternatives, and gold keeps coming up. And this is what they used to do before 1970. All the countries would have their reserves in gold, and so we just get back to that kind of era.
So let me double click on that, Charlie. So from a different perspective, we talk about the U.S. dollar, right? We got U.S. spending is high, and frankly, I'm saying U.S., but this is true in other countries too, UK as well. In the U.S., federal tax receipts, and I'm just using U.S. numbers because I know them, are about $4.5 trillion. But U.S. spending last year, U.S. spending was $6.3 trillion. So in other words, we brought in this much, but we spent a fair bit more. Federal government debt in the U.S. is $33 trillion. A lot of people think, by the way, that the Treasury in the U.S. should have been borrowing a lot more money. Like, if we're going to have the spending habit, at least let's borrow the money while the interest rates are low. And now we're kind of stupid because the rates are much higher, so it's a lot harder to borrow. But that's a separate point. What I want to ask you is your view on the U.S. dollar and this topic that comes up periodically in the media that whether it's China, Saudi Arabia, obviously Russia, India, Brazil, these guys are conspiring to move away. Is it credible that the world is going to move away from a dollar-denominated system? And if so, gold would seem to be a beneficiary of that.
So gold goes up in whatever currency is going down. It goes up the fastest in whichever currency is going down. So if you live in Turkey and your currency is sinking, then has gold done better in Turkey than America? No, it's been exactly the same. It's just that the Turkish lira went down much faster, and all currencies are going down. It's just it went down much faster. So you think
everything's relative.
Better off, but actually he's the same as the guy who owns gold in America in terms of wealth, which you can only really measure when you sort of look in from the outside, if you will, in terms of constant value. And I think that the idea that the American dollar is losing its strength, well, against what exactly? It's not like the pound's suddenly found a new revival and we're going to start an empire again. And the euro, well, that's hardly, I can't imagine Europe suddenly waking up and becoming a powerhouse. And China seems to have some problems. And the Japanese yen was not going up against the yen. So I don't know where the US dollar is going to, what it's going to die against. I mean, we're all dying against gold. Yeah, that's true.
You think so? Okay.
But I think that in the pecking order, dollar is very much the number one. There's still a couple of currencies that are interesting. I mean, the Swiss franc, if you want something that's going to go up in tough times, the Swiss franc's more likely to appreciate than the dollar, I think. But that's a small special case. That's what private wealth does. That's not what China does.
Yep. So you're not so bearish on the dollar, and I guess I share your view. I mean, the U.S. may be a drunk driver, but we're the least drunk driver on the road in many ways. People are getting out of the dollar into something else. What is that something else? It's got to be better than the dollar, right? And there are not a lot of good alternatives at this point,
That's
as you
right.
point out.
That's right. And I think gold is just a reflection of that. So if gold is going down, then that means everything's working well in the economy. And if it's going up, it means it's not working so well in the economy.
Yep.
And
Yep.
working well doesn't mean growth. It doesn't mean unemployment. Working well can be many different things. It's basically we're looking at the economic efficiency and the outlook over the next 10 years. And so if gold's going up, then it's probably telling you that the next 10 years won't be quite as good as you might have thought they might be. And if it's going down, like it did in 2013, it's telling you the next 10 years are probably better than you could think they're going to be. I mean, in 2013, people were bearish, but the US ended up having a pretty good decade.
Yeah. It's a gauge on fear, as Warren Buffett describes it. Let me shift to Bitcoin, because to the outside observer, the idea of combining gold and Bitcoin is quite interesting. It's just gold is tried and true for probably one of the oldest investments in humankind, and Bitcoin is one of the newest. So I'm broadly, it's easy to be a crypto skeptic, but I've been somewhat skeptical of crypto for a while, mostly based on this notion of fake trades. And I did some research. A lot of the crypto bubbles and crashes that we've seen apparently have mostly been fake. In other words, like if I've got a US penny here, but this could be any currency. If you agree to buy this from me for 10 US dollars, then I buy it back from you for 11 and then 12. We can afford that because it's just one penny. It's a small transaction, but that lets us mark up all the other pennies on our balance sheet to some high number when we've sort of artificially manipulated the price up. And apparently, there's been lots and lots of that going on in cryptocurrency. Do you know, like, if that's still the case? Like, what's your feeling on crypto these days, writ large? Again, coming from a skeptical view.
So manipulating crypto is very easy, provided you choose the right crypto. It's a bit like trying to manipulate pink sheet stocks in the States. Very, very junior small caps. So let's try and, we're going to play a game. Let's manipulate Apple. So Apple couple.
Not going to get very far, yeah.
We're not going to get very far. So let's try and manipulate gold or Bitcoin. Gold, not very far. Bitcoin, a little easier, but we can still need lots and lots of money. But if we want to manipulate some junior crypto, not a problem. I'm sure that our collective network could actually do that. I don't know how long we'd last, not forever, certainly, but maybe we'll get away with it for a few weeks or months, and it'll be fun, along the way. So I think that we've got to separate Bitcoin from crypto. And notice how my bold concept is Bitcoin and gold. It's not Bitcoin, Ethereum, Solana, Ripple, and all this stuff. It hasn't got any of that. It's just Bitcoin. That's the big liquid one. It's the peer-to-peer one. It's the one without a chief executive or a board of directors. It's truly an alternative asset, and it's a very liquid asset. So I would say that you cannot Bitcoin cannot be manipulated in the way you describe. But yeah, junior alts, no problem.
Got it. Yep. And it sounds like, I mean, with a structure like Boulder you wouldn't advocate. This is not something for a huge portion of investor portfolio anyway. Like this would be something if I've got some mutual funds or some ETFs, some individual stocks, maybe some bonds, I might add an allocation of either of these asset classes. But you're not one of these all-in kind of guys, at least based on all the time I've known you.
No, not at all. It's an alternative asset. It's part of your portfolio. The World Gold Council have always said that if you have a 60-40 portfolio, 60 equities, 40 bonds, add 8% in gold will boost the risk-adjusted returns. It's going to help you in certain years, hinder you in other years. And I just come along and said, well, add 2 or 3 Bitcoin into the mix. And so, I think that if you had in a 60-40 portfolio, you own 10% in gold, then it's a very nice way to own gold. Because what we're doing is we're managing on a risk-adjusted basis. That's basically 3/4 gold, 1/4 Bitcoin. There's a bit more to it than that, but we'll leave it there for now. At the end of each month, the portfolio is rebalanced. So in October, Bitcoin went up a lot, gold went up a bit. So we're selling Bitcoin and bringing it back down to that weight and adding gold. And over time, what you're doing is you're outperforming buy and hold Bitcoin and gold because the rebalancing transactions add value. Rebalancing transactions, big institutions have been doing it for years. They do it routinely to try and capture extra return. And so you're accumulating a little bit more gold and a little bit more Bitcoin by rebalancing than not. So the two reasons, one, you get the risk adjustment, you get the convenience, and then you've got the rebalancing for the extra bit. And the extra return can be 5 to 8% a year. So it's pretty
That's meaningful, especially these days.
Yeah. And so, another thing about, you've already mentioned the volatility. It's just a very neat way to own the world's two most liquid alternative assets. And you don't need the other stuff. You don't, if you want to buy silver, great. I love silver, but it's a trade. Gold is the long-term buy and hold in your portfolio. Bitcoin's the long-term buy and hold crypto in your portfolio. Everything else around it's a trade. And that's the way I see it. I'm not saying that's right. It's not how everyone needs to see it, but that's how I see it.
Let me step back to trends, because you mentioned trends earlier, and you mentioned that you like UK stocks right now more than US on valuation reasons. How long is that trend? Like if I'm investing for 1 year, I'm guessing you're going to tell me to buy UK stocks, maybe 2 or 3 years even. If I'm investing for 10 or 15 years or more, I know it's a long time, are you still more bullish on UK? I mean, do you not worry as much about the structural concerns that everybody keeps talking about?
I don't know what they are. I live here. I'm used to it. So it's actually the other way around. I wouldn't actually pile into UK stocks today. We do own some in our portfolios, but we don't have aggressive position. I think I was answering the question of valuation. So the valuation of UK stocks is much lower than the valuation of American stocks. That's a statement of fact. That's not a preference. It's just saying that they're cheap. Therefore, on a 10-year view, you would expect undervalued assets to outperform overvalued assets. So on a 10-year view, I'd certainly favour UK stocks and also emerging markets over US because that valuation gap should close in the long run. But in the short term, I think it's obvious that the stock market has got its challenges. I'm a value investor. I've got a couple of US stocks in my portfolio. I've got some European stocks. I've got an allocation to emerging markets. Latin America, that kind of thing. So, I've got a very, very diversified portfolios, gold, Bitcoin, tips, inflation-linked bonds in the UK, different oil and various emerging markets, and some manufacturing. So those are the sorts of things, all completely different.
Well, you're well-rounded, it sounds like. What's going to be the catalyst, Charlie, for emerging markets? I mean, people have been saying, emerging markets are going to have their day in the sun again. And it was, I forgot, 10, 15 years ago since they had a day in the sun. And they've been on the burner ever since. But the U.S. dollar keeps staying strong. Now, U.S. interest rates are up, and they've got a lot of debt that's denominated in U.S. dollars. So emerging markets is too broad of a category in one sense to generalize to everybody. But if you could generalize, what's going to be the catalyst?
Well, I think historically, a weakening dollar has always been very helpful because it's like a tax cut for the world. If you're sitting in Indonesia or the Philippines or Brazil and the dollar's going down, you think, oh, thank you very much. Life's easier this year than it was last year when it was going up. Dollar goes up and down. So, just because the dollar has a bad year doesn't make it the end of an empire. Currencies go up and down, so it's perfectly okay for when we come past through this current mess, right? When we've had this pressure that we were clearly going to some kind of recession. As we come out of it, I would expect the dollar to be weaker. So I'd expect it to be stronger in the downturn and weaker when we get the upturn. So I think in the next cycle, emerging markets could do really, really well. They're dirt cheap. No one owns them. All the funds have closed down. It's classic, isn't it? Whatever no one owns is what's best next.
The blood is in the streets, for sure, for sure. Do you worry, or do you have any opinion about this effect we've had, at least in the U.S. markets, where on paper they're up? I mean, yes, they're down a bit, but on paper they've been up this year. But if you dig in, it's really like the top 7 stocks or 10 large cap stocks that have basically carried all the weight. And all the other ones, even the S&P 500, by the way, people say 500 stocks must be big. Most of those are small caps, small companies, smaller than people think. They're flat to down. They're neutral. What do you make it? Do you think that's bad? Is it a trend? Do you worry about that, or it's just an artifact of how things trade?
It's one of the many huge divergences we see around the world. So you've mentioned some of them already. So we've got a big one is emerging markets down here, US market up here. That's a divergence that will close. Yeah, it was true in the late 90s. It did close. The best thing the next 10 years was emerging markets. We've got it with small caps and large caps. We've got it in America with large caps and the top seven.
Mm-hmm.
The divergences are between conventional bonds and inflation-linked bonds, inflation-linked bonds and gold and other commodities. These biggest divergences I've seen in my 25-year investing career are everywhere.
Interesting.
Value and growth. And it's all going to unwind, I think, as the rates higher for longer. The longer rates stay higher, the more quickly we're going to see this unwind.
Got it. So you bet on the mean reversion. Bet on emerging markets. Bet on equal weight S&P instead of just the biggest market cap weight, for example. Things like that.
Yeah, absolutely.
Interesting. Going back to trends one more time, I noticed, Charlie, on your Twitter, you have this thing called ByteTree, which is kind of like measuring the quality of a trend. Is that? And I'm not a short-term investor, so maybe that's not for me. But what is? Can you explain like how this, not just the actual, I don't know if it's a product, but what's the genesis? What's the rationale in your investment philosophy? How do you look at trends writ large?
So measuring trend is quite an important thing because some technical analysts will tell you it's some kind of voodoo magic, reading the tea leaves and it's predicting higher returns in the future. It's not that. You don't look at a chart and make a projection in my book. What you do is you understand that the reason trend following works as a concept, and the academic papers back it up, is that you stumble upon winners. Right? So those top seven stocks, if you were trend following, you would own them over the last 10 years. Whereas if you weren't trend following, you might have missed them. You might have owned them, but you might have missed them. So a very simple way to measure winners is to look for them, and trend following will find them. And that doesn't mean to say every trend will follow through, but if you make a habit of buying good trends, you will end up in the good stuff. So even as a value investor, I'm not buying things going down. I'm buying things that start going up. So I'm looking for cheap things, and then I'm looking for a trend to emerge, and then say, oh, that's interesting. Thank you for the information. Assess it and decide whether I want to own it or not. So ByteTree, and you can follow it on Twitter at ByteTree, BYTE trend, very simply tells you the best and worst ETFs in the world on their daily trend, whether they made a new high or low, shape of the curve, so forth. More details later, no time here. But we do it in crypto, we do it in FX, we do it in commodities, we do it in country sector and thematic ETFs. And it's a lovely little tool, quite fun. The sort of TikTok finance takes you 10 seconds in the morning and you have a better, more informed view of the world than most central bankers.
So, but it's a daily trend. So if I'm a short-term trader, or maybe if I'm doing some daily, statistical arbitrage model where I'm shorting the biggest winners of yesterday and buying the losers, something like that, like who's the user of this type of information? I'm just curious.
It could be anyone, but I would say that all asset allocators need to be aware of what's going on. Mm-hmm. And you can look at a trend, in dollar terms or another currency, but you can also look at it relative. Now, at the moment on Twitter, we only have in dollar terms, but we will have, versus world, versus S&P and all that. And on our site, you can do that. But I love to see things in the whole relative strength arena because you want to know what the leadership is and where the laggardship is. And basically financials, real estate, EVs, solar, these are areas you don't want to be in right now. These are areas that heighten risks.
They're too hot.
Well, the trends have turned down. I mean, you just don't want to be.
Oh, I got it. Yeah.
And the safe, ironically, some of the safe havens are really uncomfortable as well. So historically, you would have gone and bought supermarkets or consumer staples, but these are rate-sensitive stocks. Even a lot of healthcare is going down as well. And so, and over in Europe, luxury goods they're tanking now. So there's all the rules of these big divergences. All the rules have been turned on their head, and it's natural resources which are the safe haven right now. Things like energy and global materials and that sort of thing. And I think it's very important to understand the leadership, and leadership is constantly changing in markets, and you only really know where it is by having some sort of quant system to follow. And I'm not suggesting you trade every single one. I mean, you'd be a broker's best friend if you did, and it's not going to work. It's really not the point. It's just understanding and seeing each day what happened. You could look at plus and minus on the table, but seeing all the downtrends that are up 10% is what often happens. The worst investments are often up 10% on a relief day. But actually, I'm not interested in that. I'm much more interested in something in an uptrend that's up 1%. and that's much more likely to say, oh, there's something happening here. This is pretty interesting. I remember 2013 when the Nasdaq broke out versus the S&P, and the Nasdaq had 2 or 3 points less volatility than the S&P in that year, and that had been unheard of. It never happened before. Nasdaq less volatile than the S&P. Something had changed. These companies started making money.
Interesting. An investor friend of mine, Steve Sugarrood, likes to say he likes to buy things that are cheap, hated, and in an uptrend, which seems like it fits your philosophy. Just to put you on the spot, Charlie, what are you looking, if you look at across the sectors or asset classes, what's cheap, hated, and in an uptrend right now?
Bitcoin, gold, tips, uranium.
Uranium, okay. Interesting. And so if somebody says, I would like more Charlie Morris, where should they go?
So follow ByteTrend on Twitter, ByteTree.com, ByteTree, so like a tree made of bytes, bits and bytes.
Yep, I can see in your wallpaper behind you, ByteTree.
Yeah, is that not inverted on your camera? Or?
No, it looks okay. Yeah. How did that name come about? Is it just that you made up? I mean, it seems like so many names are taken, so it's hard to pick a name these days. But how did that name come about?
The first thing we did was analyze Bitcoin. So we downloaded a node and processed all the Bitcoin transactions to try and come up with economic statistics. We did this back in 2013. And ByteTree was, I wanted to call it BitTree because a tree made of bits, a money tree. It's a joke on money tree, right?
Yeah.
But byte, so a byte is 8 bits. So it's, it's a money tree.
Eight times better than a bit tree, yeah.
Yeah.
Interesting.
Literally, so it's a joke that no one seems to understand, but money tree.
Now we do. So ByteTrend on Twitter or ByteTree.com. You can go there to learn more about Charlie Morris. Charlie, thank you very much. You've been generous with your time today. We appreciate it. And thanks to you guys, as always, for watching us at home.
Thank you, James.